All right, y'all. What's good? It's episode 2, man.
Episode 2.
Episode 2. I'm be teaching my boy how to start trading from scratch. So in this episode, we're gonna go over how to look up trades, how to find trades on the option chain, how to decipher between calls and puts, bid and ask price, and how to get filled, how to take trims, and we're gonna go all of that. Pretty much how to take trades, how to sell them, how to do all of that. So over the first episode, we talked about the chart, long-term stuff, and just going over definitions and stuff like that. Right. So episode 2, we're going to get straight to it. So now Josh got on his phone the Webull brokerage. He set up his account. He got everything right. So now we're about to go over that right now. So boom, get up on your phone right here. All right. Start screen recording so we could show the viewers what we're doing. All right, so boom, right here is your brand new account. You just created it here, and now this is where we're gonna start going over everything. So boom, this is Webull. This is the main page. This is your main account. So on the top left up here where it says individual cash, you click that. Mm-hmm. All your accounts come up. You have margin, cash, and then also on the bottom, you can open up a futures account and crypto account, all that. But right now, we're just going to focus on cash and margin account. So the difference between cash and margin account is cash account, it's your money. You put in there, you trade with your own money. Right. So when we're day trading on a cash account, whatever money we use for a day trade, it's going to become unsettled funds. So let's say you have $1,000 in your account, right? And you put the whole $1,000 on a trade. Facts. And let's just say you broke even. You got out the trade, you broke even, you're making money, you didn't lose money. That $1,000 is now unsettled funds and you can't trade with it no more. So you cannot trade with it no more. Cash account, whatever money you use for a trade and sell, it's called unsettled funds. You can't trade no more for the day until the next day your unsettled funds become settled. You feel me? Okay, so that's cash account. Yeah. Okay. So obviously, what I do is the 2020 rule. So if you have $1,000 in your account, we're going to do $200 per trade, risk 20%. You feel me? So you can initially take up to 5 trades. You feel me? Okay. So yeah. Okay. So that's that. Margin account is pretty much like you could borrow extra money, but that's only if you have shares, really. So with the margin account, let's say you have $10,000 and you bought $10,000 worth of Apple. The margin account, they'll front you another $10,000 to trade with. You feel me? Okay, so you can invest your money.
So it's pretty much other people's money too.
Yeah, like they lend you whatever you have. So if you have $10,000 in a stock, they'll lend you another $10,000 so you could trade with it while your other $10,000 is sitting and growing in the stock. Whatever.
Is your other $10,000 collateral though? Or
it is collateral. Okay. So collateral. If you mess up the other 10, they
take that.
They take that. Yeah. So that's how it works. So it's like extra leverage. So it could extra boost your profits, but also could fuck you up a lot quicker. Right. So I recommend leveraging. Only if you know what you're doing for experienced traders, you feel me? Okay, so like even me, like I really stay away from leveraging using other people's money because you could double your losses a lot quicker. You could lose a lot faster, but you can also make a lot more. So it's only for experience. So, but at the end of the day, you can have a cash or a margin account and just trade your own bread. Mm-hmm. So you could do however you want to do it. So with that being said, let's go over to how to look up a trade now. So we're going to go down to the menu, click on the right menu, and then right at the very bottom, it says symbol, name, feature, knowledge. You click that.
This is the ticker symbol.
This is the ticker symbol for the companies we're going to trade. So whatever we're trading, I'm going to say, let's trade Apple. That ticker symbol is AAPL. So you're going to put AAPL, and it's going to first one come up as Apple right there. You click that, boom. Now it shows you this chart. So there's 2 ways to get to the option chain. You either click options right next to this chart right here, and then boom, it brings you here. Or you could click at the bottom right. You see where it says trade and options. Right. You click options. So that's 2 ways to get to it. And then now this is showing you the options chain and the contracts, strike prices, everything. So right now we're looking at the very left. It's called strike, and you see 320, 322.5, 325, and all of that. These are strike prices. So what that means is that's the contracts for that certain price. And every price has a different like it's priced differently depending where the stock's at. So you see in the middle of the screen where it says Apple and it says 321.66, negative 4.2, negative 1.3%. That's the price of Apple right now. And then it shows you how much is down for the day and how much down it is for the day. But all you need to know is the ticker symbol right next to it, AAPL, and then that price, 321. Apple's at 321 right now. So let's just say we predict it to go up. So we know if we want to bet for a stock to go up, it's called calls, right? So we're going to look for calls if we're betting for Apple to go up. So we're going to look at the strike prices that's above 321. Since Apple's at 321, we want to look what the strike price is that's higher than that. So the next strike price higher than 321 is 322.5. So you can either look for that or above that 325, depending on how our profit target. And if we're looking to get like a little move on Apple, we could get the one right above it. But if we want to get a bigger move, we could get a
something
further out. Yeah. And now you see on, let's just click the nearest one, 322.5. We click that and it comes up, boom. But before I move forward, I do want to go back and explain this too. When we're here on the options chain, on the very bottom, you see where single option and right next to that says calls.
Facts.
You want to make sure it's calls because not puts because it's not going to tell you on this page unless you have both. So let's click both. Both, it's going to show you
both of them.
Left is calls, the right is puts.
Okay, so
a little bit more confusing.
Right.
It's on the same page though, so you could like do a quicker move. But usually, if I'm focusing on calls or puts, I just click either calls or I come down and click puts. You feel me? So whatever I'm focusing on, I'm gonna just have that. So it's a little bit more cleaner on this page. So that's something you want to make sure before you start getting into the contracts, because you could get into the wrong stuff and completely start losing money. So we click the nearest strike price, boom. So right now the market is closing, so nothing is moving and the prices are still. So you see all right, this first of all, this chart right here is not the chart of Apple, it's the chart of the contracts. Okay, so so this is showing you how much the contracts have been moving. You could look at the hour chart, 1 minute chart, daily chart. But honestly, that's not something you want to focus on. It's just showing you how it's moving. You don't need to look at that. What you want to look at is when you start scrolling down here, you see the green number right here, 1.47.
Right.
Damn, somebody calling my dog, man. Yeah. Somebody calling my dog. Put your phone on D&D, sleep mode, and we're going to get back to it. We're going to get right to it. Hey, look, so he learning from scratch. He really finna do this, man. He just moved into a new spot, you feel me? He was at his parents' crib on the first episode. His own shit the second episode, man. He already evolving, man. He doing good. Good head on his shoulders, man. He getting right. Right now, he putting his phone on Do Not Disturb, so no one could interrupt our screen recordings. And yeah. I'm not even going to cut this out. I'm going to just let it roll. Easier for me. I don't got to edit everything. But yeah, other than that, man, I had a good day. On my chat, we took one and done. We got Tesla puts, and we hit over 120%. One easy, simple trade. Done within 30 minutes. That's it, man. I just banked on my chat today, man. So tap in if you want to join the Discord. Link is in the
Discord.
Join the Discord, man.
My boys be hitting on live, bro.
On live. I go live every day.
Like,
I'm on live stream.
I'm watching this while I'm at work. Bro.
Yeah, at work. You could just join the live, have an AirPod in, watch the stream.
Stay tuned, bro.
Stay
watch
tuned.
What's going on.
Learn from my live.
News, bro. I'm telling you.
Exactly, man. All right. You start screen recording again?
Yeah.
All right, bet. So right here. All right. So you see the green number 1.47 and then the red number 1.68. Mm-hmm. So the difference is bid and ask. The green is a bid number. That's pretty much how much the contract the brokerage is getting it for. And then the red number is what is trying to sell it to you. Okay. So if you want to get filled on these contracts right now, ASAP,
you have to pay the 168.
You have to pay the 168. Okay, you feel me? If you want to get filled, you want to have these contracts, you pay the asking price. That's what I always do. Every time I get into a trade, I look to pay for the asking price or a little bit above so I could get in right away. I don't want to try to lower my price or like try to get a cheaper price, because from my trading strategy, I'm looking at something, and if I see it about to go and I see confirmation that it's going, I want to get filled and I want to ride the move. I'm not trying to penny pinch and trying to save, get a better price. Like, no, I get in and I catch the move. If it doesn't go my way, I just get out. I lose a little bit of money, 10%, 20%, whatever. I get out, I call it, you feel me? But usually in my trades, when I enter, it goes my way, and I almost sometimes see no drawdown. It just goes and it keeps flying, and I want to get in and I want to catch the move. I don't want to miss out on it. So I always pay the asking price, the higher number. Now, the difference between the bid and ask, you see, there's a difference right now. It's a little bit wider. Right now, it's almost like $19 difference, because you got to remember it's times 100. So the asking price is 1.68 times 100. So one contract is $168.
Okay.
And then the bid price is 147. So it's about a $19 difference, which is kind of a wide. And it also is called a spread between bid and ask. So 147 versus 168. That difference is called a spread, and the spread is $19. For Apple and for these contracts, it's pretty high, but the only reason why it's high is because the market just closed. It probably had a crazy move, whatever, you feel me? But usually when I trade, the bid and ask are only off by $1, $2, $3, which is nothing significant. Right. That's good. That's what you want to look for. Absolutely. When it's a little bit wider like this, you want to kind of like be a little bit more careful. That's when you kind of like want to try to pay a little bit less than asking. But like I said, like you just want to get filled. But yeah, when I trade, I look for the spread to be pretty tight. So because if you get filled at 1.68, the mid it's gonna show you the middle price. So if you pay this and the bid is that means the asking is in the middle. So it's gonna be like off the top of my head like 1.55, 1.56. So as soon as you enter, you're already gonna be down like $9 per contract. Okay. So you're as soon as you enter this trade, you're gonna be down because the spread is so wide. So when I trade, I look for tight spreads. So as soon as I get filled, I'm not negative already. I'm like break even or I'm going towards profit.
Right.
So that's the difference between bid ask, and the spread is in between the difference. And yeah, when you look at the spread, you want to find the closest spread, a couple dollars apart. When it's like $20 apart, it's kind of like it's not that good. Yeah. You feel me? It's a big spread. You kind of don't want to mess with it too much. I only do it if I have to. If not, I try to find closer spreads. Other than that, I forgot what I was gonna say. I'm not trying to skip anything. That's why. But yeah, it's pretty much times 100. So you got to know when you come down here, it says limit price. And as soon as you click the screen, whatever the asking price is, the limit price is going to be right there. Okay. So, you know, this screen right here is literally the screen I'm at when I say I'm loading these contracts. So if I say I'm loading 322.5 calls, July 24th expiration, this is where I'm at. I'm one click away to getting filled. Right. This is loading. Okay. So when I see the trade going in my favor and I see confirmation, I want to click buy and boom, I'm in. I don't have to type all of this. I don't have to type out Apple. I find this, make sure it's calls, make sure it's puts, because that 30 seconds, 60 seconds, you're typing everything, you can miss out on the trade. You feel me? Sometimes it happens that quick. Yeah, exactly. Yeah. So you want to have this. When I say I'm loading these cons, this is where you want to be at, right one click away to getting it. So when I'm here, this is a little trick that I do is you see the limit price is at 1.68. I click the plus sign and I push it up a little bit higher. I push it up like $10, $20 higher just so I get filled, because let's say you have it at 1.68. And let's just say you're waiting. I'm like, all right, I'm getting filled. And that second you take to click buy, the contracts went up to 1.70, 1.71. But you click to buy at 1.68 and it doesn't get you filled.
Yeah, because it done went up.
Then you're like, damn. And what if it keeps shooting and going and then you miss it? And the worst thing you want to do is back out of it and pay a price that's a lot higher. Then you get like such a bad average. You feel me? Sometimes you just want to get like, when I'm getting filled, just put the price up higher so it fills you right away. So now when you put the price up higher, like you see when it goes up, the price goes up down at the bottom. It tells you exactly how much it costs. So I put it up and when I see that my trade going, I click buy. And one thing you have to understand is you could put whatever number, you could put $200 per contract. It don't matter. 2,000. It doesn't matter. When you click buy, it's going to fill you whatever the asking price is. So never think you're going to overpay for a contract. So that's why I always put the number very high. And then I put the amount of contracts I'm looking to trade that's similar to my risk management. And I sit on this page with my limit price set higher. So when a trade starts shooting my way, it fills me right away no matter what. You feel me? And then I'm in the trade. I ride my trade. So yeah. So that's how you do that. That's how you execute it. And when you click buy down here, it's going to pop like this. You're going to click confirm and it's going to go like that. Market's closed, so it's not going to do anything right now. But usually when you go in, you just back all the way out. You click on your main page, and then down here where it says positions, it's going to pop up right there. Okay, it's going to pop up, and it's going to say you're filled, and you're going to see your percentages moving. Mm-hmm. If you try to get filled and it doesn't fill you, it's going to come down here, but instead of saying my positions, it'll be another tab called open orders, or you see up here where it says assets, P&L, orders. It's going to be right here. So if it does not get filled, it's going to be sitting right here on this page saying open order. So if you try to get filled and you miss it by any chance, it just shot too much and you miss out, it's going to be sitting here at open orders. So you could either click on the order that's open, you could either cancel it or modify it and put the limit price higher to get filled. You feel me?
Okay, say less.
Yeah, so you could do that. Or yeah, so I really don't recommend chasing trades if it's gone too much. Like, let's say I get in a trade at $100 per contract, and then you look at it, it's at 130. That means it's already up 30%. You don't want to get filled when I'm already up 30% because I'm already selling some. My stop break even. Yeah. If you get filled at 130 and I'm up 30%, that means if I come back to break even, you're going to be down 30%. You missed a move, and you're going to be taking a losing trade while I already profited from it. You feel me?
Right.
So if I get filled at like 100, and then you see a fill, you could get at 104, 103, 105. That's fine. 3, 4, 5%, a little bit higher than me. That's fine. You're getting as close as possible. But if it's already up 20%, if I'm already saying I'm taking trims and I'm selling some, you're already kind of too late. You don't want to get into it. Yeah. So don't do that. So that's something you want to be mindful towards. And let's just say, boom, we're here. Our position is open at the bottom. I wish the market was open so I could actually do it and show you, even on the paper trade account. But the market's closed, so I really can't show you how to actually execute it. But down here, let's just say our position is open. You click it, it's going to show you your profit loss. It's going to show your percentages. It's going to show you how much you got it for, how many contracts, the total cost. It's going to show you everything. On the bottom, it's gonna show you like the same thing. Let's go back to a contract here. Let's pick a random contract, and boom, when you click your position and you go to sell it, it's gonna come up on a page very similar to this, just like this, but instead of buy, it's gonna say sell. Right. So down here, now remember where I say the bid is how much the price it is for like them, and then asking is to get filled right away for when you're buying. Now it's the opposite. When you're selling and you want to get filled right away, when you're selling, it's the bid price. That's the selling price. So if you want to get filled right now and there's a wider spread, you want to sell it for the bid. Okay. Boom, sell it for the bid. But yeah, so you would come down, put the limit price, and then usually when you click the page to sell it, it's already automatically here, and you just click sell. You click sell, and then it usually does it for you. Okay. But let's just say you try to click sell, but while you're clicking sell, the trade went against you, and now let's say you put the limit price to sell as your bid, but let's just say it was instead of 120, you try to sell it, it's down at 115, but you actually put 120 and went to go sell it, right? And it didn't fill. It's the same thing as open orders. You go back to your main page right here. Every time you don't get filled when you're buying or selling, it's going to be here where your orders are, and it's going to be an open order. So let's just say you try to sell, but while you're trying to sell, it went back down, and now you're down like a little bit less on the contracts. You could either cancel it or modify it for a lower price to get sold right away, or you could just leave it, and if it pops back up to where you try to sell it, it'll sell it for you. You feel me? Okay, but you want to understand, every time you try to buy or sell something and it doesn't go through, it's always sitting at the open orders. So let's just say you bought one contract of Apple. It went up 20% and you try to sell it. But when you try to sell it, it went from 20% down to 17%. But your order to sell it was at 20, right? And it didn't get filled. And it's sitting at open orders. You have to cancel it or modify it, or else it won't let you sell it. So let's just say you try to sell it. It didn't go through. It's at open orders. And you're on this page. You're looking at your P&L going up and down. And you try to sell it again, it's going to say a message like, error, you can't sell, you have an open order. So you have to be mindful to cancel your open order or modify it to sell it. I know I'm kind of going fast. It's a lot to learn right now.
Yeah.
I want to take a second, take a breath. Do you have any questions right now?
Okay, so I wanted to ask this. So you said when when you were trying to sell, like say if you're trying to sell the contract, like you're trying to sell and you're selling, but it didn't. I guess you didn't get like it didn't load, like you didn't get it didn't sell yet, right? So, but the price, I guess, goes down. Because say, like you said, it was at 20%, but now it's down to 10%. So, but your contract didn't get sold yet. It's still an open order. So when it does sell, will it sell for what your order was on?
Yeah.
Or will it drop down to that 10% and now it's going to sell for what it's at now?
That's if you change it. So
only if you modify it.
If you modify it. So let's say you get in a trade with $100. It goes up 20%. You're up $20. You try to sell it, but while you try to sell it, it just went back down real quick and you missed it. But you click sell and the order went for 1.20. You feel me? But you're back down to only being up 10%. It's not going to go through until it pops back up 20%, or you personally cancel it or modify it to do that. Yeah. Okay, so.
And then another thing, so you remember how it had the calls and you could click calls, puts, or both? Mm-hmm. Okay, so the reason mainly like why you wouldn't do that is because when you're taking a position on the trade, you normally necessarily know like, okay, you know what, I'm going on calls or puts.
Exactly.
Because you're looking at the behavior, so you know where you want to stand at, which position you want to take.
Exactly. When I'm looking at a trade and it's playing out of my strategy, it's breaking some support or breaking above previous day high, it's bouncing. I'm looking for calls, or if I'm looking for calls, I'm looking just for calls. If it's breaking down, I know it's bearish, I'm looking for puts. I'm never looking at a trade, I'm about to buy calls, I'm about to get calls, and then it starts breaking my support. Oh, let me flip to puts. No, I don't do that. Yeah. I don't flip flop. That's for people that scalp, that take 10, 20, 30 trades a day. I only take 1 to 3 trades a day. I have a larger time frame thesis. I go over like a really in-depth strategy where it's pretty simple, but it's easy to execute. So if I'm looking at a chart and it's going like this, every day it goes higher, I just mark out my levels. I'm like, okay, this trend is bullish. So I'm going to look to buy calls the next pullback it does, right? Mm-hmm. So by no means necessary, I'm going to look for puts. If it pulls back to my level and buyers start stepping in, I'm getting calls and I'm going to let it ride with a stop loss right under. If it breaks under, I'm not going to flip to puts. Oh my God, I'm getting puts. If I'm a wait, you feel me? If I flip, it's very rare that I'm looking for calls on a very bullish stock and it breaks like my entry, like, oh, I want to enter it when it pulls back, and it pulls back, but it keeps pulling back. I don't like, oh, let me flip to puts. No, I don't do that unless it breaks down a lot and it really like breaks a key level for me. You feel me? Yeah. So, but there's times I do where I'm looking for calls. You don't have to screen record no more until we go over something else. Yeah, it's very rare, but as a trader, you have to be adaptable to if something looks really good, but it starts to fail and break levels, but you wanted to get calls, but it started to really fail. It broke some major levels. You could flip to puts. I've done that a handful of times. I did it a lot, but
it's not something that you would try to go in or like try to recommend doing or something like that, because you want to kind of take one position and kind of stand on your position.
With experience, I know when a bullish starts to flip bearish, when a stock went from bullish to bearish, and then I could switch to shorts. I've done that the other day, I believe so. I did that with one trade, but I think I did with Nvidia. It was popping up, right? It was bullish, and I looked for a pullback, right? And then it started to bounce. I got in calls, but it didn't hold that level, and it failed it. So I didn't immediately get to puts. I wait and watched it. And I waited, watched it, and it failed. And it completely failed another level. and now like it depends on the levels too. If it's just like a pre-market level or like just a normal level and it breaks it, I'm not jumping on puts. I'm waiting. But if it's like a major level that it's reacted to off larger time frames, the daily, the 4 hour, the larger the time frame, the more meaning it has, the more important it is. Okay. So let's just say on the daily time frame, Nvidia bounced off 200 like 6 times, 7 times. It keeps bouncing off 200. That's a major level on a daily time frame.
Right.
But let's just say on the 5-minute time frame, Nvidia bounced off 201 2 times. You feel me? That 5-minute time frame that it bounced once or twice is a weaker level compared to 200, where it bounced 6 times on the larger time frame.
Right.
So that what makes it more significant, because it bounced a lot more in the larger time frames. It's gonna show levels that it respects more. So if I'm looking for Nvidia calls bouncing off 201, but it breaks, I'm looking at 200. And if 200, the very big major daily demand level breaks, I'm switching to puts. Exactly. That's exactly what I'm doing. If it broke 201 and it went down, I'm not getting puts because I know there's a major support under. I'm going to wait for what the major support's going to do.
Right.
If it's a weaker level, I'm going to just let it be. I'm going to see what it's going to do. If it's a strong level, it breaks or it bounces off of it, I'm reacting off of that. So if Nvidia, when I took it, let's just say for 201, it bounced, I took it, but then it didn't go that much higher. It came down, I got stopped out. I was looking for 200 for a bounce, but it failed 200 and I got puts because I knew that was a major level. So that's the only scenario where I'll switch from calls to puts. You feel me?
Okay.
But yeah, you could honestly, everyone has their own preference. You could have the calls and puts on the left and right side. But usually when I'm looking at a stock, I'm confident in one thing.
Right, and where you're going. And you know the direction you're trying to go.
Exactly. You don't want to be like, oh, let me see what happens here. I'm going to get calls or puts. Like, you have to be confident in one level. Right. You feel me? As a man, you got to have confidence in what you're doing. And you see your trade coming up, your strategy's coming up. Be confident in taking that. Right. And when it happens, take it with no hesitation. Because when you take a trade with no hesitation and you have your risk set, you have your emotions out of it. You feel me?
Right.
So if this trade is bouncing off a level, it's in my strategy, I'm going to pull the trigger. You don't want to sit here and be like, all right, wait, let me wait a little bit longer. Let me see if this happens. Let me see what happens. And it starts going. You're already missing out. You feel me? Your risk or your stop loss breaking right under is getting farther away and you're risking a lot more. You feel me? Yeah. So as a trader, you want to get into a trade that's as close as possible to your stop loss. You have to, if your stop is a break under a level, get in as close as it bounces, as close to that stop loss, because your loss is small. You feel me? Facts. The closer you are entering to your stop loss, the better risk reward you have. Now, if a stock is bouncing off a level and you're waiting, you're like, I don't want to get in. It's so close to my stop loss. Let me wait for more confirmation. It keeps going. You're getting so far away from your stop that when you enter at the very high, the nearest pullback, it could stop you out. So let's just say I get a bounce off a level, right? It bounces off a level and I get filled and I'm up 10, 20, 30%. And then you get in because you wanted to wait. You want to be careful. You got in at the very top. That pullback where it comes down and then it continues, it could make you lose the trade. You could lose either 20% or more. You feel me? If I get in, all right, what I'm trying to say is, let's just say it bounces off a level and my stop loss is right under it's negative 10, 20%, right? If you wait and it keeps going, then you get filled, that same stop loss that I have, you're going to be down 40%.
Facts.
So that's what I'm trying to say. Yeah, get in as close to your stop loss. If it's your stop, take it. Don't hold it. Don't hesitate.
Yeah,
hesitate. Exactly. Just let your trades ride. Trading is a probabilities game. You can't be right 100%. So trading is a probabilities game. Okay. You're gonna lose. You're 100% gonna lose. No one can win 100% of the time. So that's something you really have to understand. And when you do lose, you have to accept that was the outcome and that was the probability, because that's part of the game. Right. So with that being said, a lot of people that do take losses, they can't handle that. And then that's when they go out of control and start over trading, revenge trading, oversizing, and that's the one way to blow your account. You don't want to do that. You don't want to build up those bad habits because a lot of people do, because it's human nature. We have that tendency, once we lose, we want to get it right back. And the market gives you big opportunities every day to make a lot of money. You feel me? That's the only field where you can click a button and make $200, $300, $1,000, just like that, depending on your size of your account. So with that, knowing you, with knowing that in your head, you're like, fuck, I just lost $200, but if I take another trade, I can make it back just like this.
Right.
You don't want to do that. You want to sit back and take the loss, observe what's going on, and kind of just regroup, and then look for another probable trade that's in your strategy and stuff like that. You don't want to just start taking trades out of nowhere, start scalping. That's the worst thing to do, because the thing is, you can get lucky and win, and that's the worst thing that can happen, because now
you'll form a habit
of doing it, right. And then now you start doing it, and then it takes a long time to break a habit. You feel me? Right. I've dealt with having bad habits, and it took me forever to break them. So with you coming into this game as a complete beginner trading from scratch, I want you to avoid every single bad habit, so you don't have to ever go through any big losing periods, right. It'll save you so much time and money. You feel me? But like I said, we're all humans, and we're all like, we all have that intention to do shit like that. We have to make quick money, to revenge trade. We get emotional. We can't go around it. We're humans. But what we can do is be aware of it and acknowledge that we're not going to do it. You know what I mean? Yeah. So yeah, man, it's all about that discipline.
Yeah, facts. Like I say, like, I feel like you just gotta have that discipline, like, as well as, like I said, like, about confidence too, and discipline. But especially, I think discipline helps you form your strategy, kind of, because what is a strategy if you can't stick to it? You know what I'm saying? You kind of need discipline to stick to your strategy. Mm-hmm. But one thing, like, I really think that is cool and dope, man, about your strategy is that, like, you have a certain point where you just are done.
Exactly.
You know what I'm saying? A stoppage point, no matter if that's good or bad. You see what I'm saying? Because, bro, you have to be able to take a loss. Like you say, you're not going to win 100% of the time. It'd actually be kind of crazy to think that you are. Yeah. You know what I'm saying? And that could just form you like a bad habit. And I can already see, like, just envision in my head, like, a person, like, they lose some, and they're like, you know what? Nah, bro. And they keep going, and they keep losing. And you could lose way more than it could have been just $200 loss. Exactly. You know what I'm saying? But now you just turn it into a $5,000 or something like that. You know what I mean?
Exactly.
So, yeah, I feel like you definitely got to form that discipline and, like, just stick to your strategy. You know what I'm saying? Never go outside of it, because I feel like one thing about it, like you said, we're humans. You know, we're going to be emotional. This type of things are going to happen. But once you go out of this strategy, now other things are liable to happen. You know what I'm saying? And you're going to be starting to make a lot of mistakes that, you know, traders make when they begin. You know what I'm saying? And stuff like that, bro. And you're not going to be really a profitable trader. Exactly. And then you might even just give up altogether because of everything that's happening. So, yeah, I definitely think that discipline plays, like, a very huge part in it. You know what I mean? I definitely think it plays
a big thing about trading is survival. The longer you can stay in the game, the better you're going to become. Right. The more time you do something, the more experience you'll gain. So if you blow your account, you do anything stupid, you lose a couple $100 and then you revenge trade, you keep going, and then you blow up your account, you blow up a couple thousand and you can't trade, you have to take a break. That break, or that point where you quit, you're not gaining anything. You're losing, and you're out of the market, and now you're getting out of touch with it. Right. So trading is like a sport. You have to show up every day, whether it's a good day or a bad day, and you have to execute, and you have to practice and get better. You feel me? Because that's the only way you're gonna excel in this field. You feel me? Yeah. So I like this one quote. It says, "Following your rules is more important than money, because all the money that you make, you'll inevitably lose to the market if you break your rules." Facts. Yeah. So it's really crazy. But yeah, with me helping you and mentoring you, I'm going to help you avoid all of the bad habits. I'll help you set up good risk management and rules that you will stay in the game long term, and you'll have a lot of knowledge, like, in this game, because you're gonna stay in it the whole time. You're not gonna miss a day. You're gonna be on your shit. You're gonna be studying, and within a year or two times, you're going to be more knowledgeable than people that have been doing it for 5 to 10 years on and off, quitting, coming back, quitting, because those type of people, they keep repeating the same mistakes. That's something you're not going to do. You're going to, if you make a mistake, that's something you will never repeat, because you'll know, you feel me? You'll have that discipline. You'll have those good habits. But hey, man, this is going to conclude our episode 2, Trading from Scratch. Here with my main man, Josh, man.
You already know it, man. Like I say, man, I just want to tell, bro, you know what I'm saying? Thank you, man. It's been dope. Like, really just this whole experience with the trading, you know what I'm saying? Like I said, being in the Discord, man, seeing how it's actively like a beneficial to, you know what I'm saying, like people's lives, you know what I'm saying? And you don't really have people like that are trying to just help other people. Usually it's for, you know, something on the back end, or, you know, like a person wants to see you do good, but not a lot of people want to see you do better than, bro. You really find people like that, you know what I'm saying? Or just want to even help you elevate. They'll rather see you stuck in where you're at, you know what I'm saying? Because it gives them some type of sense of self-importance or whatever. So it's really dope that bro is helping me out, you know what I'm saying? Y'all stay tuned, like you say, tap into the Discord, man, you know what I'm saying? Man, be on Discord, catching all the trades on live. Y'all see all the action, real time, real life. Ain't no nothing. Yeah, so it's definitely lit, man. Y'all boys tapping.
Stop playing with them.
Yeah.
Peace out, y'all. See y'all on episode 3.